Hello guys and girls, and welcome back to another episode of Quick Tips. In this episode we're going to be talking about mass psychology and how it is important in our current style of trading. So before we begin, firstly we need to understand what is mass psychology and why is it really important to us. Well, all it simply is you're getting in the mind of what everybody else is thinking. You're getting in the mind of where people on the wrong side of the market are thinking. Now, when we go and use things like patterns, that becomes even more important. So let's demonstrate that on the chart so you can see what I mean. So we've got the pound over the dollar here, and we're going to be looking at how these mass psychology areas give us an indication to give us an edge. So let's take a look. We're on the daily chart and we're looking at this particular section here. Now, before the 2008 crash, you have to look at it from this perspective. Let's actually go to the weekly chart. Before the 2008 crash, we can see we had that overall big ascending channel. So we can all agree on that. Knowing what you know now in terms of patterns, you can see that it had a 90% probability it'll at least get to the low. Now, mass psychology is getting people caught on the wrong side of that. So quite often what people do, you're getting in the minds of what other traders are thinking. When they see the market going down, 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 impulsing down, they think that it will just keep going. So what they do is they sell the lows and then they buy the highs. The market keeps moving up, 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 and they think it's going to keep going up. So what do? They buy the highs. And banks and hedge funds know that, and they get people caught on the wrong side of the market, and then they push it in the agenda that they want. Now, it's no coincidence that forms patterns. So this is where patterns are so important. So if we take a look at that crash in a bit more detail and we pop on the low here, you can see that if we was to look at, the typical perfect support and resistance, you can see how we break the low. As traders, especially trading patterns, we're expecting that. We already know that it's a 90% probability it will be here before it makes a deeper correction anyway. And now let's take a look at what it looks like at the top here. This is even more interesting. So we can see that we've got this one big sideways correction. And you have to understand that the majority of people believe that a trading strategy like support and resistance is that when it gets to these areas and it breaks the support, that it's going to keep going. That's where they get caught on the wrong side of the market. This is a great example here when you can see this correction. Notice how that we just break it here and we just break above. This is why patterns are important, because they're creating these patterns for a reason, and it's getting people caught on the wrong side of the market. And I know exactly where I want to be. We want to be on the right side and understand what the other side are thinking, so then we can capitalize. And when you look at that, that's just a typical Falcon style pattern. Looking at that for a sell setup is an absolute no-brainer. And when you can see that type of formation happen time and time again, it gets your mind used to understanding how you can really have an edge within the market and predict that. When you combined all of that with the fact that we're looking at the whole move as one big impulse sideways correction as a continuation pattern to the downside, and then we have these patterns to then understand what the masses are thinking, that really gives us the true edge in the market. And that's what's key, having that true edge, so you know exactly how to capitalize, but more so why you're doing it. And that's going to give you a lot of clarity. So I hope that makes sense and that you understand you've taken away some value from that. Now let's take a look at another example. So here we have the Great British Pound and the Japanese Yen. Let's take a look at it. So if you remember previously, for those of you guys and girls that have been with Falcon from the earlier stages, you remember this trade that we capitalized on, which was a fantastic position. And you can see that in older webinars. When we look at it to the degree, we're seeing this move here as a impulse. This is a correction for a continuation to go higher, at least to this area here, which we can see. Now, when we're looking at what are the masses thinking when this trade is moving to the downside, you remember this was one that we was waiting patiently. And what we had is our ray line on here. Notice how the masses are seeing this as a broken support. They're seeing it as a broken support. Now think of it like this. It may be obvious to you now because you're used to seeing these continuations, you're used to seeing these patterns, descending corrective nature. But this is what the masses are thinking, which is why patterns are even more important for our trading because of that. So when we're looking at it, let's take that back to, let's say, this part here. Imagine seeing that now. Let me put that right there. Imagine seeing that now, nearly a broken support there. If we go one more tick, as you can see, that's a clear break. That's a close on the daily chart. That's completely broken. What we see, we're expecting it to break the low to get people caught on the wrong side of the market. Now, sometimes these things that we talk about and we say, it kind of makes sense, but I think we really have to dumb it down and be completely basic with it. All we're doing is getting people on the other side of the market so then we understand where we're going to be. And it really is that simple. When you combine that with the fact that this is just one big descending nature channel, and then we can see this type of formation here, we can then take a look at it and see, well, how would we capitalize on that? We know it's a descending type formation. So what we do is we drop to the 4 hour. Let's take a look at that. When price was there, we can see that we form a further descending type formation. So it was really within this area here, which was the fantastic position as a risk entry break of the structure down this area. There's a fantastic position on the 1 hour chart or the 4 hour chart. But as you can see on this part, we had that falling wedge type formation, which we were speaking about. So it comes as no surprise. And it was purely because we're expecting them to break the lows now. And for those of you that have been in Falcon for a while, you can see how your mind's now different when you're looking at the markets. At the beginning stage, this would have been different, and it would have been the same for me, 7-8 years ago. I would have thought, well, it's broken, I'm going to sell that now, with no regard to how patterns behave and what the other side is thinking. Now that gives us complete clarity, and it's incredible. So I hope that helps, guys and girls, get you used to thinking and understanding why we actually trade patterns in the first place, because this is why patterns are so effective. Because of that, they give us the edge within the market. Sometimes we do get really good double tops. As you can see, this one nearly makes it to the double top. It's pretty much a double top. And then other times it breaks higher, gets people caught on the wrong side, and then we take advantage, which is why we're utilizing the Falcon system and the methods. On the daily, what you can see is that we've got that massive double bottom type formation, and it's just being squeezed and consolidated. We've got the potential for so much more on this trade. We're literally at those lows here. Who's looking at pound yen at the moment? Because this is one that I really want to show something that I see a lot, and we may get it right now. We've broken the low there. I'm not sitting there thinking that, pound yen, it's broken that previous low. I only want to look for sales now, because I want to dive in deeper and show you exactly what would be going through my mind as of right now, right? Just by using something as simple as the ray line and some price and pattern recognition. Does a correction, then that's fine. We just commit to the sell. Really easy stuff, right? And then we have the potential for a massive sell if that happens. But what we still may get is this overall move, 1, 2, 3 to the upside. So we've got the two scenarios. We want a convincing push down for the impulse. We want that push down for the impulse, wait for the correction, to then sell that, or we actually get that push up. And then this does become a false breakout. This does become a confirmed falling wedge. And then we look for those buy setups. So then it traps everyone short here. This is that area in which that it's getting everybody on the wrong side until it wants to go up. And once it does that enough, it then triggers the other orders to get long. But I just want to go over previously what we was looking at last week and the importance of catching the false breakouts, because I see them happen so much, and it normally is catching out support and resistance type traders. So if you look at it from what we was looking at last week, we broke the low, didn't we? Right? But just because we broke the low, it was still looking at this. So again, as I mentioned in last week's webinar, we may get a break of this wedge. So the fact that this wasn't falling impulsively with big red candles, and it was doing it in a wedge formation on the 4 hour, daily, and 1 hour, you can expect that turnaround where it just catches up people short. Let's actually go into that and see how far. So I hope that helps, guys and girls. And what I recommend now is go through as many pairs as possible. It doesn't matter how good you are at trading. You can always go back to the basics. Go through as many pairs as possible and actually find where that happens on patterns, and actually think about it in that moment when you're capitalizing on that type of position. What is someone else thinking? What are the majority of people thinking right now? How do they trade? How do they learn? When they jump onto YouTube because they want to get some free education, guess what they get? They get support and resistance. And that is how the majority of people are learning and trading. But where is the money going? Where are the big hedge funds and the banks, the momentum going? It's because they're focusing and creating these patterns, and then they push it in that direction. So naturally, things like the pound dollar example, where it pushes up just a little bit higher and then it drops. That's no coincidence. This is happening time and time again. So I highly recommend that you put that onto the majority of charts so you can see that. What it's going to do for you as an actionable step is build that confidence when you're seeing something, and then you're not getting, let's say, hesitant when you see something go a little bit higher than a double top than you expected, because then you're taking into regard how important the pattern is, and that's the question that you should be asking yourself. So have a great end to the week. I hope you've enjoyed this episode of Quick Tips and look forward to bringing you many more. Take care, guys and girls.